Carried on. Liberal Democratic Party won a great victory on the election of House of Councillors this time, and Kishida administration solidified stable political foundation and working out countermeasure against high commodity price in the Japanese society is primary mission in economic policy. But large-scale monetary easing policy by the Bank of Japan is likely to be continued for the time being. But the Japanese markets expect Kishida administration to modify Abenomics promoted by the former Prime Minister Shinzo Abe, who was killed right before counting votes. And appointment of successor of the Bank of Japan, Governor Kuroda, receives a lot of attention in terms of whether the Bank of Japan will change the route of proactive monetary easing policy as one of the three pillars of stability advocated by the former Prime Minister of Shinzo Abe. And in an election campaign, a financial policy is one of the points of issue over the high commodity price in Japan. The Bank of Japan still takes careful stance towards increasing the interest rate because Japanese economy is now on the way to recover from damages by coronavirus pandemic. And the Liberal Democratic Party won a great victory on an election of House of Councillors that insisted on effectivity of continuity of monetary easing policy, and LDP somehow got a trust from nations on the financial policy management of the Bank of Japan this time. On the other hand, in response to worldwide inflation, central banks in countries in Europe and FRB in the United States have been accelerating monetary tightening because of different directionality from the mutual financial policy between Japan and the United States. Interest gap between the US and Japan has expanded naturally, and this brought strong dollar and weaken in the foreign exchange market. Yen market temporarily marked $1 137 yen, which has been the cheapest price for 24 years on July 11th. During the situation where low material costs and energy costs have sharply appreciated because of Russia's Ukraine invasion, yen depreciation is spurring on sharp commodity price increase through increase in import price. And the price of food and dairy necessities has increased one after another. An opposition party criticized this situation as Kishida inflation. So severity of household finances has increased as well. So moreover, the Bank of Japan supporting Abenomics took a plunge and enforced a new phase of monetary easing policy 9 years ago. And the result that the Japanese government has continued buying the large amount of government bonds. Its retention amount by the Bank of Japan is 520 trillion yen, which is almost half of the issuance of volume of the Japanese government bonds. So researchers indicated that this was a quite optimistic budget discipline. So while adverse effects of large-scale monetary easing policy are outstanding, whether the Prime Minister Kishida changed the route of Abenomics will be the primary focus for nations in Japan. So there is also an indication that the political difficulty of policy amendment may ease because momentum of the request of continuity of monetary easing policy to the Bank of Japan will weaken inside the ruling party after the death of the former Prime Minister Shinzo Abe. In regard to the Bank of Japan, the term of office of the Governor Kuroda will expire next April, and the selection of successor will begin in earnest from now. And there is a perspective that Abenomics was not more effective than expected, but it is premature to judge Abenomics as a bad financial policy by its superficial results, because Japan has been covered because the Japanese government has neglected deflation for a long time. So we can have another viewpoint that financial easing policy should be continued for economic growth strategy in a sense to promote flexible financial policy and promote investment in private sector during the during the time of Russia's Ukraine invasion. However, it is also obvious that a new phase of monetary easing policy by the Bank of Japan quota brought by Abenomics has a certain contradiction in it. The Bank of Japan had no choice but to do reckless fixed rate bond buying operation because it was difficult to fix monetary easing stance. So dollar reached 137 yen because dollar was strong against yen, but primarily the situation has something to do with directionality of financial policy between the Bank of Japan and FRB in the United States. I don't mean the Bank of Japan should largely increase the interest rate like FRB did, but at least I think it should return normal monetary easing policy back from the current new phase monetary easing policy. I presume that election of House of Councillors this time was held with the aim of modification of a new phase of monetary easing policy. But the Bank of Japan is now rejecting to move forward this way. But foreign hedge funds may realize the pitfalls of the contradiction of financial policy by the Bank of Japan. So I personally think the Bank of Japan should take action before it is driven into deadlock situation when we think about the impact to Japanese market.